Good morning. Ira Epstein with your morning flash update for this Tuesday. And this is March 19th, 2019, just after 9:16 a.m. Central Daylight Time. You know, today's the beginning of the two-day FOMC meeting. We're starting to see more news come out of Europe, stability. You'd be surprised. The UK is actually doing better economically than a lot of people are giving it credit for. If we look at the pound, it's up into the 133s. The market's talking about what do they do with another vote, so that'll be going on and arguing through it. In the energy market, we seem to be in a resistance area. And the question is, on this leg of everything coming up with OPEC holding back, saying they're going to wait till June to have another meeting, just how high do you think the Brent can go becomes the question. So here we are near $68 a barrel, hit that today, sort of stalling. Notice the bonds and notes. It wouldn't surprise me as a pro trader that what you're seeing in these two markets is the market taking money off the table, getting ready for tomorrow's FOMC announcement to see just what goes on. You've had sideways action, probing the upside, backing off a little bit now. Grain market's still under a little bit of pressure here. And the big question, of course, is the flooding. How's that going to delay what goes on? We've got in many years, in many markets, 5-decade floods, some 100-year floods. In Illinois, I know it's very, very bad. And there's more to come as everything's coming from Wisconsin right on through some of the areas here. And of course, the Dakota's coming down. The good news is there's not a lot more rain in the forecast right now. In the metal markets, it's sticking its head up again, trying to make the best of the situation, platinum and palladium acting strong. Now, as you look at factory orders today, they came in up 0.1%, right where expected. Prior month was revised to up a tenth from the same thing. I don't know why they revised it. It looked to me like it's the same. January factory orders ex defense up 0.2, prior months up 0.4. Okay, but that's not bad. It's still growth. Factory orders ex transportation, here's a decline, down 0.2, but it's an improvement from the prior decline of down 0.6. So the market's going to look at that as rosy. And durable good orders, that was revised down 0.1 in January. Retail sales fell 2.6% from the prior week due to weather, but we're up 1.5% on the year. Remember, we had that terrible, terrible weather, which I think affected a great part of America. Now, here's good news for the market. The German zoo current conditions, 11.5 versus 15 in February, but here's where things start getting better. The economic expectations were down 3.6 versus a forecast of down 11, and they were down 13.4 in February. And the advisors have dropped GDP projection to 0.8% from 1.6. Now, why do I think that's a positive? I think it's going to force the European Central Bank to do something. That's why I think it's a positive. The markets there need help. They're stabilizing, but they're not picking up, and that's the difference. In the Eurozone, fourth quarter labor cost up 2.3% on the year over year versus 2.5% year over year in the third quarter. And fourth quarter wages 2.3% up versus 2.3% in the third year. And here's the UK, and this is why I'm saying things aren't bad there. I realize all the mess, but unemployment rate falls to 3.9% in the first 3 months through January. That's from 4% in the prior 3 months, and that's the lowest since 1975. That's pretty impressive. The number of people at work hit a record high, 32.7 million, almost 500,000 more than a year ago, and wages grew at an annual rate of 3.4%, the same in December, so they've got wages under control. None of that's the worst information that you could have one way or the other. For those of you that haven't tried my research yet, remember, I do offer a free trial to it. You get the morning subscriber video that you hear me talk about so much. You get to see my written commentaries and written trade recommendations, which is different than you're going to get in other parts of either my commentary only or my video only. So I put it all together. You also get the daily numbers, so you learn how to put window envelopes on your charts and where those support and resistance zones might come into the market. So you get the daily commentary. You can also see and remember, if you decide to take my commentary only, it's the same thing as my commentary with the trade recommendations. But it is a free trial to my whole package. All you need to do is give my staff a call. You can go to our website, sign up for it, www.iraepstein.com. Now, we're about ready for me to start. I did one energy report last week. We're just about ready for me to start plowing through a lot of special reports. You'll see the ads coming up here as we do that for them. You'll be able to go right to the website and get right into them. So look for this to happen. It'll cover all the futures markets with special reports, and it'll be a regular feature that we do. I'm Ira Epstein. You have a great trading day, and I'll see you at the end today with my end of the day videos.